Nvidia just reported earnings, and the stock had a wild after-hours ride. Right after the earnings release, shares of Nvidia surged to around $200.31, jumping more than 2% in extended trading as investors reacted to the massive earnings beat. But later in the session, the stock pulled back and is now trading around $195.49, down slightly by about 0.07% in after-hours trading. So what caused the initial spike, and why the cool down? Let's break it down. Nvidia delivered record-breaking results for fiscal Q4 2026. Revenue came in at $68.1 billion, up 73% year-over-year and well above the $65.8 billion estimate. Adjusted EPS was $1.62, beating the $1.53 consensus. Gross margin remained extremely strong at 75.2%. The real driver continues to be explosive AI demand. Data center revenue hit $62.3 billion, up 75% year-over-year. That segment now makes up more than 90% of total sales. Demand from hyperscalers like Microsoft, Amazon, and Alphabet continues to power Nvidia's AI infrastructure growth. The transition to the new Blackwell architecture is accelerating, replacing the H100 and H200 chips at scale. Other segments also showed strength. Gaming generated $3.76 billion, boosted by new Blackwell-based GPUs. Automotive and robotics delivered $570 million, up 72% year-over-year. Professional visualization reached $510 million, supported by Omniverse adoption. Then came the big surprise, guidance. Nvidia projected $78 billion in revenue for Q1 fiscal 2027. Wall Street was expecting $72.8 billion. That's roughly a 7% upside surprise in guidance, which explains why the stock initially shot higher after hours. The early surge likely reflected excitement around accelerating AI spending and strong forward visibility. The later pullback? That's typical post-earnings volatility, some traders locking in gains, others digesting valuation levels after such a massive run. Before earnings, analysts were already bullish. The average one-year price target was around $255 to $256. 43 out of 49 analysts rated the stock a strong buy. Fiscal 2027 EPS estimates ranged from about $7.03 to $7.74. After this beat-and-raise report, expect analysts to revise numbers higher. The $78 billion guidance forces revenue model upgrades. Margins holding above 75% reduce fears of Blackwell cost pressure. And some high-end price targets were already between $309 and $352, meaning the average could trend closer to $300. Bottom line, Nvidia reinforced that the AI infrastructure cycle is still accelerating. The data center engine remains dominant, margins are elite, and forward guidance surprised significantly to the upside. The after-hours volatility shows how sensitive the stock is, but fundamentally, this was another powerful quarter. If you found this breakdown helpful, make sure to like this video, subscribe to the channel, and turn on notifications so you don't miss the next market update. Thanks for watching, and I'll see you in the next video.